Have you ever had that gut feeling about a trade that turned out to be spot on? Now, as traders, there are times where you need to make split-second decisions with limited information. This is where intuition plays an important role. Today's presentation is on the role of intuition in trading. Now, I hope you find great insights and value in this presentation. So we're going to dive in right now. I hope you enjoy. So, what is intuition? Intuition is the ability to understand something instinctively without the need for conscious reasoning. It is that form of knowledge that appears in your mind without the usual analytical process, often emerging as a feeling or a sense of certainty. Intuition is the product of your experiences, knowledge, and subconscious processing. Every trader has experienced moments where they just knew that something was going to happen, even if they couldn't explain why. This is intuition at work. It is fast and often subconscious decision making. So let's look at the characteristics of intuition. Intuition is characterized by its speed and its automatic nature. Now, when you rely on intuition, you make decisions quickly without the need for analysis. This can be incredibly beneficial in trading where markets change in a millisecond. Your brain is capable of processing vast amounts of information below the level of conscious awareness. It's about drawing on patterns and past experiences to inform your decisions. Now, another characteristic of intuition is that it often operates below the surface of your conscious mind. You might be fully aware of why you feel a certain way about a trade, but your brain has already done the work for you, pulling together various pieces of information. Now, the relevance in trading. Intuition can be a very powerful tool for traders. There are situations where quick decisions are necessary. Now, in these instances, relying on intuition can give you a real edge in the markets. Now, for example, experienced traders often develop a sense for market movements, and they anticipate changes before they become apparent to others. Every trader has faced moments when the analysis is unclear or the market is behaving even more unpredictably. In such times, your intuitive sense will guide you towards making decisions that you might not be able to justify logically, but it's just that feeling, right? This is because your intuition is drawing on a wealth of knowledge and experience that you might not be consciously aware of. Now, it's important to note that intuition should not replace analysis and your strategy, but rather complement it or them. Successful traders use a combination of both. They trust in their intuition while also grounded in their decisions in solid research. Now, have you ever made a trade based on a gut feeling that paid off? Many traders have. However, it's important to balance intuition with a disciplined approach to trading, recognizing when to trust your gut and when to fall back on your analysis and your skill. Now, intuition is a very important aspect of trading psychology. It allows for quick, often accurate decisions. So understanding and honing your intuitive abilities, you can significantly improve your trading performance. I've seen it many times as well. Every trader has the potential to develop their intuition. It's all about experience, trust, and awareness. So, how intuition works in trading. Have you ever felt like you just knew what the market was going to do next? Intuition in trading is more than just a lucky guess. It's a very, very sophisticated process that taps into your experience and subconscious mind. Now, let's explore how this works. Now, over time, as traders, you accumulate knowledge from every trade you make, every chart that you analyze. This experience forms a database in your mind. It's like a collection of patterns and outcomes that your brain can draw upon in an instant. It's very powerful. Now, when you're in a trading situation, your brain is constantly scanning this database, looking for matches to, say, current market conditions. This is why experienced traders often have a better feel for the market. Your intuition is essentially your brain recognizing patterns from past experiences and suggesting similar outcomes for that present situation. So, subconscious processing. This is your subconscious mind at work, When, say for instance, have you ever wondered how you can make a snap decision without consciously analyzing every detail? This is your subconscious mind at work. Your brain is incredibly powerful, or our brains are, processing vast amounts of information below the level of conscious awareness. Now, what does this mean in trading? Well, while you might be focusing on specific indicators or charts, your subconscious is absorbing a multitude of other data points, price movements, volume changes, and even the psychological state of the market participants. All this information is processed and your brain presents it to you in the form of a gut feeling or hunch. This subconscious processing is like having an advanced algorithm that's running in the background. It's continuously analyzing data to help you make good decisions quickly. So, next, situational awareness. Being attuned to these subtle cues, if you like, can make a significant difference in your trading performance. Situational awareness is the ability to perceive and understand the current market conditions. It's about recognizing shifts, changes that might not actually be immediately obvious. So, what do I mean by this? Well, for example, you might notice a change in trading volume or a shift in the behavior. These subtle cues can trigger your intuition. It can alert you to a potential opportunity or even a risk. Now, developing this kind of awareness involves paying close attention to the market and your behaviors. So, have you ever noticed how experienced traders seem to just know when to enter or exit a trade? Intuition in trading is a powerful tool. It's a blend of your accumulated experiences, your brain's ability to process information again below the conscious level. So, next time you have that gut feeling about a trade, remember that it's your intuition at work. It's so powerful. Trust it, refine it, let it guide you to greater success. So, the benefits of intuition in trading. Well, there's numerous benefits that can really help you achieve long-term success. Let's see how these benefits can become one of your greatest assets. Speed. Intuition allows you to make really fast decisions without the need to second guess or have that prolonged analysis. When you're tuned into your intuition, you act swiftly, decisively. Imagine you're watching the market and suddenly a familiar pattern emerges. Your gut tells you it's time to act. You don't have time to overthink or second guess. Now, this quick decision-making capability can be the difference between catching a profitable trade or missing out on one. Next is adaptability. That flexibility to respond to unexpected market changes. Now, we know that economic events, political developments, and even the sudden shift can all lead to unexpected changes. Intuition helps you to have that flexibility to adapt to these changes swiftly. Rigid strategies can sometimes fail in the face of market movements, but your intuitive sense, however, allows you to adjust your approach on the fly quickly. When something unexpected happens, your intuition will guide you in finding a new path forward. Now, for me personally, over the years, I've really developed a high level of intuition. When I work with traders, I use my intuition as well as my experience and expertise, and the combination is really powerful. So, we're going to talk more about confidence, the increased confidence from relying on your gut feelings. Confidence is so important in trading, as we know, not being overconfident, but having the right level of confidence. Now, trusting your intuition can significantly boost your confidence. When you make decisions based on your gut feelings, you're tapping into a deep level of subconscious knowledge and experience. This self-reliance builds a sense of assurance in your abilities. Now, every trader has moments of doubt, but when you trust your intuition, you reinforce your belief in yourself. This increased confidence can help you to stay calm and composed. A confident trader is more likely to stick to their strategies, more likely to make decisions without hesitation, and this will lead to better outcomes. Now, pattern recognition. This is identifying market patterns that may not be immediately obvious. Have you ever spotted or seen a market trend or a trend that others seem to miss? It's just that feeling, just seeing things more clearly. Intuition is closely linked to pattern recognition. Your brain is powerful. It's powerful at pattern recognition. Is capable of identifying very complex market trends that might not be immediately apparent. This ability allows you to see opportunities that others might not see or overlook. The market often presents subtle signals. Now, intuitive pattern recognition enables you to detect these, giving you an edge over those who rely solely on analysis and data. So, intuition offers numerous benefits that will really improve your trading performance. It enables quick decision making in fast moving markets. It will provide you the adaptability to respond to unexpected changes. It will boost your confidence and improve your ability to recognize market patterns. Now, I think we need to talk about the risks of relying solely on intuition because it's not about that. We are going to explore the potential pitfalls of relying too heavily on trading or intuition in trading. So, the first one is the emotional bias. The highs and lows of the market are ever changing. These emotional swings can lead to decisions based more on feelings and facts. Now, when you rely solely on intuition, there's a risk that your decisions are influenced by your current emotional state. If you've had a string of successful trades, then you might feel really confident and take unnecessary risks. Be aware of your emotional state and its potential impact on your intuition. So it's about having that self-awareness because let's talk about overconfidence now. This is is a common risk associated with intuition. When a few gut-based decisions turn out well, there's a fine line because it's easy to overestimate the accuracy of your intuition versus overconfidence. This overconfidence will only lead to bad decision making, as I'm sure you all know. Cross-check your intuitive sites with analysis to ensure that they are really grounded in good information and research. Intuitive decision making can be inconsistent, heavily influenced by your mood and energy levels. One day you may feel really sharp and in tune with the market, while on the other day you may feel a little bit off balance, leading to poor decisions. I'm sure you understand this can lead to a lack of consistency in your trading performance. So be aware of this inconsistency. It's vital, and finding ways to stabilize your decision making is really going to help to reduce any risk and to find a good balance. Now, also, let's go on to talk about lack of evidence. Decisions made without supporting data can lead to losses. This lack of evidence can lead to making trades that are not grounded in good information. Every trader should remember that intuition should complement, not replace, a good analysis and your strategy. Ensure that your intuitive insights are backed by good research as well. This combination of intuition and good decision making and analysis is really going to give you an edge in the markets. Now, while intuition is powerful in trading because it also can carry some significant risks if not managed well. Emotional bias, overconfidence, inconsistency, and lack of evidence are potential areas which can really affect traders. So balancing intuition with analysis or strategies, finding the right balance between intuition and analytical strategies is important. Let's explore how you can integrate these two approaches to create a more effective, resilient approach. Intuition and analytical strategies don't have to be at odds. In fact, combining them can provide a more comprehensive view of the market. So what do I mean by this? Well, having an integrated approach leverages that strength of both intuition, which is speed and pattern recognition, While data driven analysis provides evidence and structure, it's such a harmonious relationship. Now, imagine that you're analyzing a potential trade. Your gut tells you it's a good opportunity, but you also run the numbers and conduct thorough analysis. When both your intuition and the data align, your confidence in the trade naturally increases. This approach ensures that your decisions are both instinctively and logically good. Now, backtesting. Backtesting allows you to test your intuitive strategies against historical data. Now, this helps you to see how they would have performed in the past. The process helps validate your intuitive insights. It gives you a better understanding of the effectiveness. So, backtesting, you can start identifying patterns, ensuring it aligns with your strategy. This method provides a feedback loop. It helps you to distinguish between your intuition, those gut feelings, and those that may lead to losses. Now, CPD, or continuous personal development or ongoing learning, is key to enhancing both your analysis, your skill, and your intuition. The more you learn, the more you experience, the sharper your intuition becomes. That's natural. Now, education helps you understand market dynamics. It helps to improve your skill as a trader, while experience teaches you how to recognize patterns and make quick decisions. Staying updated with all of the news, market trends, reading books, analyzing your past trades can all contribute to your growth. Now, this continuous learning ensures that your intuition is informed, building that confidence, that trust as well. So, balancing intuition with skill, analysis, a good strategy is a combination for successful trading. So, how do you develop this intuition? Let's go through these steps so that you can start to improve your intuitive abilities and make better trading decisions as well. Now, the more you trade, the more patterns you recognize, and the better you become at anticipating market changes. Whether you're successful or not adds to your knowledge. It's essential to view each trade as a learning opportunity. Pay attention to the market, the behavior. Over time, your brain will start to pick up on these subtle signs. It will help you to enable you to make quicker decisions and more accurate decisions. Again, we're going to talk about journaling. Reflection is an important component of developing intuition. Keeping that trading journal where you track your decisions, particularly those based on intuition and analysis, can increase intuition. Write down your thoughts, feelings, and the reason behind each trade. Now, this will allow you to identify patterns in your intuitive decisions. Over time, this reflective practice sharpens your intuitive skills. It will help you to avoid repeating past mistakes. So, mindfulness. Mindfulness is such a powerful practice. It can enhance your intuition. It can improve your situational awareness. It can reduce emotional biases. Now, if you practice mindfulness, it's going to help you to recognize these emotions as they arise. You become the observer. So, techniques such as meditation and deep breathing can help you to stay calm and focused, help you to become the observer of you. This is only going to enhance your ability to make more intuitive decisions. Intuition is not just about gut feelings, it's about drawing on a deep well of experience. Embracing these practices, you're going to really improve your intuitive abilities. So the next time you feel that intuitive nudge, remember the journey you've taken to develop this skill. Trust in your experience. Reflect on past trades. This balanced approach will help you build the power of intuition and achieve greater success in the markets. Now, you may want to take some notes, because we're going to talk about practical tips for you as traders. Here are 5 practical tips to help you incorporate intuition into your trading practice. So, Start with small positions when relying on intuition. When relying on intuition, it's wise to start with small positions. This approach allows you to test your gut feelings without risking your capital. Starting small, you gain confidence in your intuitive decisions whilst managing those potential losses. Now, as you gain more experience and your intuitive accuracy improves, you can gradually increase your position size. Start small, or starting small not only protects your portfolio, but it also gives you the space to learn and refine your intuition. So use intuition to generate ideas. Now, have you ever had a trading idea that just felt right, but you weren't sure why? Intuition is so powerful, as I've mentioned. Use your intuition to identify potential trades, but then apply your analysis to assess their viability. Now, combining intuition with analysis, you'll start to make good decisions. This practice helps you leverage the best of both worlds. Now, I want you to start thinking about developing a routine that incorporates both intuition and analysis. Take some time to tune into your intuition here. Now, again, you can do this through a mindfulness practice or reflection. Regularly practice both intuition and analysis. This routine ensures that you remain adaptable and prepared for any market conditions. It really helps to give you an edge. Again, regularly reviewing and learn from intuition. Keep a journal, analyze both successful and unsuccessful trades. This will help you to identify patterns and areas for improvement. So, next time you feel that intuitive nudge, remember to start small. Validate with analysis and question your gut feelings. This will help you develop a stronger, more reliable sense of intuition. Now, as we come to the end of the presentation, we've explored the important role that intuition plays in trading. We started by understanding what intuition is. We've looked at how intuition works. We've also examined the benefits of intuition in trading. And we've obviously explored some practical tips to help you enhance or improve your intuition. Now, while intuition can offer such valuable speed, insights, and help you, it's important that you find that balance as well and not just trust on intuition. Make sure that it's also supported by analysis and skill and evidence. So if you have any questions about this presentation, please add a comment below. I hope you have a great week and I look forward to seeing you next time. Thank you.